And we are live. Welcome to the Noble Credit Podcast. Today, we're going to be talking about military finance. I'm going to be kind of giving you a blueprint on the things that you should be doing as lower enlisted or junior officers. This could work for junior officers as well. It's just that if you're a junior officer, you're going to be able to do these things at a quicker pace due to being paid more. So, welcome. I'm Noble Credit. I'm active duty military, which means I'm going to be talking from an active duty military perspective. Been in for 7 years, have experience with pretty much everything to do with military finance. This channel has been around for a few years, and on this channel, I almost exclusively talk military finance, and I'm trying to help my other service members gain the knowledge that I've gained through years of trial and tribulation, and also not have to do the same mistakes that I've done. So if you are lower enlisted, you got to listen up. Junior officers, listen up, because I'm going to guide you really quickly through the things that are going to set you up for financial success while in the military. Now, being in the military offers a bunch of different advantages to you. Yes, there are some disadvantages to being in the military, a little bit less freedom. However, the military kind of makes up for this with great healthcare system. Great is, I know, subjective, but typically it's a great healthcare system. You can be diagnosed with something life-ending, life-altering, such as open heart surgery in the military. Pretty much takes care of that for free. Nothing out of pocket. I don't know many other employers that really do that. So the military system is pretty good. Now, financially, the military system can be good. Is the military going to pay you as much as a civilian worker, a civilian employer is going to pay you for a tech job, for instance? Like, is an IT in the military going to make the same as an IT outside? Probably not. However, with the benefits that come to being in the military, you could make up for that. And that's what I would like to set you up so that you can do. And anybody coming into the chat, welcome. Hey, brother, hope all is well. Hey, thanks, man. Thanks for being in the chat. Shojas, is that how you pronounce your username? Shojas, welcome. Today, I'm going to be talking military finance, helping lower enlisted and junior officers get ahead financially, so that, once you get to your 10-year mark in your career, you set yourself up to not coast toward the end, but you've put the pieces together so that you don't have to scramble to put the pieces together getting toward the end of your career. Now, I know not all of you are actually going to make it to a 20-year career, and that's fine. But I'm actually going to set you up to be able to get out of the military as well. So let's start with some axioms. I think we need to have a few things straight before I get too deep into it, because certain things, like, you could come into this believing that all debt is bad. And I'm here to tell you that's not true. All debt is not bad, or that credit cards are bad, or that you should never get a bunch of credit cards. And I'm telling you, that could be true sometimes, just depending on who you are, depending on how responsible you are. Me personally, I have a lot of credit cards, not because I'm in a bunch of debt. I just have a lot of credit cards because I benefit a lot from having credit cards. I get a lot of credit cards for free. I get basically thousands of dollars every year in free travel that I use consistently. And I actually document that on things like this channel, Instagram. So follow me on Instagram at Ty600, TYSIXHUNNID. You can follow me there. You can see me document. I actually recently did a trip to Lake Tahoe. It was a really fun trip. I got a trip coming up to, where am I going? Puerto Rico and St. Thomas. Hutch is in the building. Hey, what's up, Hutch? Major Key, blessings to you and your family. Hey, thanks, man. Shoja says, I was in for 6 years and unfortunately was medically discharged. Wish I could have gone the full 20 for sure. Okay, so you have people in the comment section that even wish they could have gone the distance in the military. So if you're able to do that, you're very fortunate. So I want you to use this information to be able to take it to 20 years or to 4 years. It doesn't matter. You're going to come out smarter after listening to this video. Another thing that I need you to understand is, yes, this is coming from someone physically in the military. However, there are some military trainings that are actually pretty good. One, for instance, is going to be Military Millionaire. No, that's not what it's called. What's it called? I'm forgetting the name of the course, but it's on JKO, Joint Knowledge Online. I took it a few years ago. I recommend everybody take that course. Anytime someone comes up to me and asks me, hey, what can I do to, what type of courses can I take as a lower enlisted or junior enlisted, or even junior officer to learn more about finances or to just help myself, better myself, I tell them to take that course on JKO. Because that course, what it does is it gives you all the blueprints from credit cards to loans to mortgages. It's not going to give it to you the way I'm giving it to you, but it's going to give it to you to the point where you're going to come in, you're going to leave that course knowing more than you did when you came in. So let's start with a few axioms. Credit cards are a good thing. Okay. Debt. It is okay to have debt. And I will explain this. Another axiom. Spending money, you want to budget, but spending money is okay sometimes. I'm going to explain this with the credit cards. All right. I'm going to make it make sense to you. All right. So credit cards are fine to have. All right. And then fourth, you need good credit. Like, you can't be a person that thinks I'm just going to live off the grid financially. It's not going to work that way. You have to have good credit to be able to exist in this economy. Yes, you can get away with not having credit, but I don't know why you would want to do that when it's so easy to establish credit. There are some people that are going to be against credit, but most people, you generally should have a credit. You generally need credit to be able to get certain jobs, mortgages. Yes, you can do manual underwriting, but that's too much. You're doing too much. It doesn't take that much work to have good credit. So since you're starting off at the lower enlisted level, let's pretend like you just got out of boot camp. How would I talk to you just getting out of boot camp? So in boot camp, they probably came to you, Navy Federal probably came to you, and they signed you up for a credit card, and you got the Navy Federal cash rewards card, the green credit card. Most of you or some of you probably have that. Great. All right, this starts your credit journey. However, if you did not get suckered into, I'm saying suckered in because most people aren't going to know what they're doing when they sign up. I never signed up for the cash rewards card when I was in boot camp, but that's because I actually already had a Navy Federal Gold Rewards card going into boot camp. I came into boot camp trying to prepare for the Navy. I was excited. So you're going to have a credit card right now. And if you don't have a credit card, how do you get started with your credit journey? And the reason why we're starting with credit card, because we need to build your credit. All the rest of the money talk, it starts with having good credit. Can you do it without good credit? You can do some other stuff without good credit, but we're trying to make this as easy as we can for you. So starting with good credit, how to get good credit. First, you're going to need some type of revolving line that you owe, such as a car payment or an installment loan, such as a car payment, or a line of credit with a bank, or a credit card or mortgage. You're going to need something like that. But preferably, it's better to start off with a credit card. They're really easy to get. The ones in boot camp that they gave you, the Navy Federal ones, they're super easy to get. They give you a $25,000 credit limit off the bat. That's pretty good. They don't just give out, banks don't just give out $25,000 credit limits, but Navy Federal, they pretty much do. So you're going to start off with a Navy Federal credit card. And if you don't have one, there are plenty of beginner credit cards to go with. I've done a video on the Discover It credit card. That's a really good beginner card. And this is going to be a little bit controversial, but some of the higher end credit cards, I've seen stories of people getting approved for those that's their first credit card, such as the American Express Platinum credit card. Yes, the American Express Platinum card. Where's my Platinum card? Like, people have gotten approved for this as their first credit card. And I'm here to tell you, yeah, it's completely possible. Cards such as the Apple credit card, they have a pre-approval tool that you can check to see if you're going to be approved before you even get the card, which I think is extremely valuable, because if you don't have any credit and you want to see if you're going to get approved, you don't even have to get a hard pull. So let me explain what a hard credit pull is. And that Platinum card looks like this. The light is shining. The Platinum card looks like this. Let me explain what a hard credit pull is. It's a inquiry into your credit report, and that hard pull, it docks a few points from your credit score. So let's say you have a 750 credit score and you apply for a credit card, and they do a hard pull in your credit to check your credit to see if you can get approved. They're going to dock your credit score a few points, like maybe 5, 6, 7 points. Okay, so now you have a 5 or a 744 or a 745 credit score from that hard inquiry. Now, hard inquiries are not the worst thing in the world. Yes, they are bad to get consecutively, but I have a lot of credit cards, and I have multiple real estate properties. I have a lot of assets. I have a lot of credit limit, and I can tell you it has not negatively affected me to have a bunch of inquiries, nor has it negatively affected me to have a bunch of credit cards. In fact, it's a plus for me, because I have the end game in mind. I have the vision to see that there's going to come a time when I'm not getting a bunch of credit cards. I will have all the credit cards that I need, and then I'll pretty much stop applying for them, and then they'll just continue to help me through the rest of my career. That's getting a little too deep in the weeds. Let's start with credit. You want to get your first credit card. If you already have your first credit card, all right, let's start moving into the credit card game, because we need to set you up with some credit card points. And I think the best way to use credit card points is not for the pay yourself back tool. It's not to buy gift cards using credit. It's not to transfer them for less money than the points are actually worth. I think the best way to use credit card reward points is on travel. All right. Because that's what I do. I find ways to travel for free, try to travel all around the world, all around the country for free, or extremely subsidized. And I'm looking at the comment section right now. Hutch said, annual fees for Amex are waived for military members. We put all expenses on it and pay it off every month. Tons of points. That's right. So one of the great things about having a credit card while in the military, some issuers, some banks such as American Express or Chase or Citibank or US Bank, they're going to waive the annual fee on the credit cards. So you can have a credit card with a $550 annual fee, $450 annual fee, and the fee is going to be waived because you're active duty military. Then all you're doing is getting benefits from having the card open. So if you have, say, just hear me out, if you have, say, a 20-year career, and let's say you have 5 credit cards that give you that cost $550 for civilians, but they give you, let's say, a $300 travel credit. That's 5 credit cards giving you a $300 travel credit. So that's what, $1,500 a year for 20 years? That's a lot of money. So if you think about it from that perspective, then you can think about why someone like me who's in the military and who has a ton of cards just like this, how I'm able to travel for free, how I'm able to enjoy one of the ancillary benefits of being in the military, but I take full advantage of the fact that banks waive fees for you under the law. They waive it under the Servicemember Civil Relief Act and the Military Lending Act. Mostly the Military Lending Act, because the Military Lending Act applies to credit acquired after your active duty service date. A bank like Capital One, they're going to waive your annual fee based on the Service Member Civil Relief Act, which applies to credit acquired prior to active duty. All right. So those are two different things, but both laws help you as a service member. It's just one law applies to credit acquired after service has initiated, and one applies to credit before service is initiated. So one of the good things about the Service Member Civil Relief Act is that they will pay back any interest that you've paid on credit cards or on loans over 6%. Any bank that honors SCRA, they will pay you back. So you'll have to contact that bank in order to get paid back. I've actually gotten money back from a credit card that way. Excuse me. One Bridge 11 says, what branch of military are you in and what's your rank? So I am in the Navy, and I will let you guess my rank. All right. So let's continue. We're on the credit. We're on the beginner credit, and we're trying to establish your credit so that you can get these nice high-end cards. And the high-end cards are not the end game. Okay. The end game is going to be a little bit later on, and we're going to explain. But we have to get these beginner credit cards. So we have pre-approval tools that you can use to see if you're going to be approved prior to actually getting that hard inquiry on your credit report, which is going to dock your score a few points. It's not a big deal, just letting you know what's going to happen. Some issuers, like American Express, if you become a customer, such as if you have a credit card like the American Express Platinum card, they're going to only do a soft credit inquiry on your credit. And what a soft inquiry is, it's a inquiry into your credit report that doesn't affect your credit score. Yes, so this is a good thing. One Bridge 11 says Admiral. Yes, I'm an Admiral. Thanks for the promotion. All right, so continuing on. So American Express is going to do a soft inquiry if you're already a customer with them. So that's why it's actually a pretty good idea to go ahead and get with them pretty early on, because you're going to have to get with them eventually to get these annual fees waived on your eventual American Express Platinum cards, American Express Hilton Aspire cards, Marriott Bonvoy Boundless credit cards, things like that, Amex Gold cards. Some of the cards that people already have, it's just I'm letting you know now exactly what to do, because we need to get your credit started. So going from 0 to at least one credit card. After one credit card, we need to get you probably a few more. Everyone's going to be a little bit different. Everyone's not going to have a bunch of credit cards like me. Everyone is not going to be able to do that because not everybody is going to stay in the military for as long as I plan to. So if I'm doing 20 years and I have years left in the service, and I'm still going to benefit from these cards, they're going to benefit me more than someone who's only going to be in for 4 years, right? So you could get these cards and only benefit from the first 4 years and then get rid of them. And then good, fine, that's fine. Now, let's move on to what happens after you get your beginner credit cards. I would rather, while you're increasing your knowledge of military finance, we need to get you started investing in your thrift savings plan. So a thrift savings plan is basically the government's version, federal employees version of a 401k. All right. So you purchase a thrift savings plan. It's really easy to sign up for, actually. They try to get you to sign up for it in boot camp, but likely what happens is they put you into the G fund. Now, there are like 4 different funds. There's an I fund, S fund, C fund, G fund, and some life cycle funds. So it's like 5 funds. The life cycle funds, they are based on the year. So your life cycle fund could end in 2050. Life cycle fund could end in 2055. And these funds, these life cycle funds, they're going to be based on more or less risk depending on how close you are to that target year. So the further you are away, so now they're going to have more risk in your portfolio. The closer you get to that target year, less risk, so that you don't lose as much money. What I do personally is, and I recommend this, but at the same time, don't take this as gospel because everybody's going to be a little bit different. I just go off of what historical returns have been. So the C fund tracks the S&P 500 index fund. You've probably heard of it. The S&P 500 is a list of companies in the United States, and it's the list of the 500 biggest companies in the United States. Would you say that the U.S. has a pretty good economy? I would think so. Based on the rest of the world, I would think that the U.S. has a pretty good economy, okay? So the 500 biggest companies in the United States, the C fund tracks it, and it's known as the S&P 500, and it's tracking the C fund. And what happens is, over the course of history, ever since the index has been tracked, there's an annual average return. So the S&P 500 annually returns about 10% a year. That's pretty good for an investment. So the S fund is like I would describe it as like the Russell 3000, like the 3000, the rest of the economy, almost more like mid-level, mid stocks. All right. So 500 biggest stocks, C fund. S fund is like the mid-level stocks that are going to be on the way up, but are a little bit more volatile. There's less volatility with the C fund. I would prefer if you put your money in the C fund, but that's not financial advice. I can't tell you to do that. What I can tell you is what I do. I put my money in the C fund and I kind of just leave it there and just let it build. And there's an allotment that gets taken out of my paycheck and goes into the C fund. You choose a percentage. Now, the military is going to offer you a 5% match. So you should probably meet the 5% match because it's free money. That gets to the free money that we're going to begin to discuss when it comes to credit cards. Other people's money. Remember, use other people's money to get wealthy. The government is going to give you 5% as long as you contribute 5% of your paycheck to your TSP. So you take out an allotment. It is automatic. It happens every month. And you go through the TSP website, through a savings plan website, and it will be allocated from your paycheck every month. This is good because over time, something that a lot of people will call the ninth wonder of the world, it's called compound interest. Over the course of time, let's say 20, 25, 30 years, that money is going to do this. It's going to go up in like a parabola. So exponential growth over time. You just have to keep contributing to it. A lot of people will try to contribute to this late in life, and they won't benefit as much from the exponential growth as someone who starts, as early as you are watching this video, hopefully. If you're older in the military watching this video, great. But if you're younger, you definitely want to start now because you're just going to benefit even more the earlier you start. Excuse me. So we got to take your money out of the G fund. We have to. The G fund is only going to give you about 1% annual return, 1-2%. It's the same thing as basically keeping it in a low-end savings account or putting money into a low-end savings account. Savings interest rates right now are at around 4.6% for the high yields. So we want your returns to be at least over that. So the C fund, even though the market hasn't done well, maybe over the past year and a half, the market will eventually, keep going up. And that's where you want your money to be on those upturns, because those upturns, such as a few years ago during COVID, when the market crashed and then went up, you want to benefit from those upturns because that is what's going to get you the money and the exponential growth that you want, because your money is just going to continue to grow with the market. Our market isn't just going to keep going down. It's going to slowly go up as it has done for the last 40, 50 years. So we got to get you to benefit from contributing to your TSP. We have you a beginner credit card. You got a beginner credit card. You have a beginner credit card from Navy Federal. If you don't have a beginner credit card from Navy Federal, we can get you one of the American Express cards. I have plenty of videos on my channel for beginner credit cards, such as the Discover It credit card. If you want that one, I definitely recommend getting a beginner credit card so that you can then get into what I would call the golden goose of the credit card game. You will want to get into those Chase credit cards. Now, there's actually some beginner credit cards with Chase that you could get, but I recommend getting the easier ones first. So we have to get you a beginner credit card. Now that you've established credit, you want to start thinking about how you can use points and miles. Now, this is going to get a little complicated, but points and miles are basically currencies that the banks use so that when you're earning cash back or points back on your purchases, on your swipes, you're getting points. You're getting points back for those swipes. Instead of using a debit card and you don't get anything back for it, you use a credit card and you get maybe 2x back or 3x back in the form of points. Or if you use an airline credit card, you get miles back. If you've ever heard of a commercial like Capital One, they'll have a commercial and they talk about earning miles. All right. So you want to be earning miles back, cash back, points back, so that we can start being able to travel for free. Now, one of the best ways to earn travel reward points is by completing sign-up bonuses. Sign-up bonuses are where you spend a certain amount of money in a set amount of time, such as 90 days or 3 months, and then the credit card company says, "Oh, you met the minimum spend requirement for this sign-up bonus. Now we'll give you 30,000 points, 40,000 points, 50,000 points, 60,000 points, 100,000 points," which a lot of times your minimum spend is going to be $3,000. Spend $3,000 in 90 days, get 70,000 points. All right, so this is really good return on spend because those $70,000 points can then be used to pay for travel at maybe an elevated rate, such as, let's just think about the Chase Sapphire Reserve or the Chase Sapphire Preferred. Okay, Chase Sapphire Preferred comes with a $95 annual fee. The fee would be waived for you, but I also don't recommend that you get that card. Even though the fee is waived, I recommend you get its older brother, the Chase Sapphire Reserve. But we're just using this as an example. The Chase Sapphire Preferred generally is going to come with a sign-up bonus of spend $3,000 in 3 months, earn 60,000 points, or spend $4,000 in 3 months, earn 80,000 points. All right, so those 80,000 points, you generally want to look at points as being worth about 1 cent per point. Most of the time, there are different point currencies, and they're all going to be valued a little bit differently, but let's just start from the basis. 1 cent per point. So 80,000 points will be equivalent to, at 1 cent per point, move the decimal over twice. That's going to be about $800. Now, if you have a card such as the Chase Sapphire Preferred, that $800, when used on travel, can be worth 1.25 cents per point. So I don't have a calculator on me, but that's a little over $1,000, which is really good. Now, if you had that same sign-up bonus, but you had the Chase Sapphire Reserve, that sign-up bonus would actually be worth or the points will be worth 1.5 cents per point when used on travel, which equates to easily over $1,000. I don't have a calculator handy to be able to do that math, but it's easily over $1,000. Ads will run shortly for some viewers. If you are watching an ad right now, sorry about that. But basically, earning points is going to give you more value out of having credit cards because those points are going to be worth more, especially when you use them for travel, which is the way I would prefer you to try to use your points, not to pay statement balances. I want you to be able to use these so that you can do things you otherwise would not have been able to do. Now, we have your beginner credit card. We have you investing in your TSP now. Now we have to start thinking about, all right, where's your credit score? Your credit score is probably going to be, between 720, 750, 760, 770. All right. You have a pretty good credit score. Now we have to think about real estate. But before we think about real estate, certain people are going to tell you need to avoid